Welcome to Next to Madison, a podcast to help you live your best life.
Hey, welcome back to another exciting episode of Next to Madison. This is episode 171. I'm very excited. I am sitting down with someone from the SEC who is going to talk about financial regulations, what we can see for the cryptocurrency markets coming up, and do they really protect Main Street or Wall Street? So we're going to get into it. It's going to be a very fascinating, interesting, educational interview. I know a lot of our crypto fans are waiting to see how the SEC is going to regulate crypto. So hopefully we can get the answers that we need, but we will be right back after this brief message from our sponsor with our amazing guests from the SEC.
This episode is brought to you by Balance 7. Balance 7 is a concentrated alkaline with a pH of 11+. I didn't realize that acidosis is responsible for almost every infectious disease in our world today. With COVID-19 and the world opening back up, I started taking Balance 7, and after 3 days of taking it, I feel better, I have more energy, my focus is better, I think clearer. This supplement is amazing. Thanks, Dr. Noristani, for the recommendation. And all Next to Madison listeners are able to try it today by visiting balance7.com and enter code word Madison for a complimentary gift and free shipping.
All right, welcome back. We are with our amazing guest from the SEC, Hester Peirce. Welcome to the show. How are you?
It's great to be here. Thank you for having me. I do want to give my little disclaimer, which is that my views are my own and not necessarily those of the SEC or my fellow commissioners.
I love it. This is great. I was telling Hester before we started recording that I was happy I was talking to the SEC and I'm not in trouble. I think everybody's a little bit fearful of the SEC and also the IRS, but as long as you pay your taxes and you don't cheat on your stocks, you'd be good to go, right?
Don't violate the securities laws and you'll be fine.
Well, good. Okay, so I first have to ask you, how did you get to where you are now? Like, you started in finance, but what was your journey to the SEC?
Yeah, well, it was a little bit of a circuitous journey. I went to undergrad and studied economics, which I really loved, and then sort of fell into law school without really thinking too much about it, and liked the idea of being able to keep some of that economics angle and also keep the law angle, and securities law was that perfect match for that. So I practiced a little bit before coming to the SEC, then came to the SEC on the staff, worked here for a number of years, then I left, did some other things, and then got the chance to come back as a commissioner, and so here I am today.
And are you loving it?
You know, it's got its challenges, but by and large, I really like it. I like our capital markets, I think, are very important to the country, and they're an important way for people to build their retirement and to build their businesses. And so I want more Americans to participate in the markets, to get the benefits of the markets. And so that's what I love about my job is being able to rethink rules to try to make sure that the markets work even better than they do now.
Well, perfect. I love it. Yes. And everybody should be investing. And if they don't have the knowledge, you can always get a financial advisor. So what do you say, though? Because there are people out there that just say, you know, the SEC is there to protect Wall Street, not Main Street.
Yeah, and I hear those kinds of complaints, and I understand that people are concerned, but our job, we have a very simple mission. It's investor protection, facilitating capital formation, and fostering the integrity of the markets, basically. And so what I view that is a balance, right? You need to have rules in place so that all of those things can happen, but so that people are also free to engage in transactions with one another when it's mutually beneficial. And so getting that balance right is something that we're always working on, and we're adjusting rules over time. But the markets really are a place where anyone can come to participate. Obviously, if you're a professional, you're going to have more knowledge about some aspects of how things work than others.
Yes.
But everyone is welcome to participate. And our markets perfect? No, but our markets, I think, are better than capital markets anywhere else in the world.
Okay. No, very well said. And I'm not sure if there's something I bring up that you can't talk about or don't want to talk about, just tell me.
Sure.
Obviously, last year we had the whole thing with GameStop. And it seemed people that were really involved in the retail investors that were involved in the GameStop thing felt the SEC was really protecting Citadel more than they were them, with a lot of the freezes going on, not being able to sell. What's kind of your opinion on that?
Well, I think that was a moment for all of us to take a look at the rules and see how they're working. I mean, it was an unusual event to see that much retail interest concentrated in a few particular securities.
Yes.
And so we did go back and kind of take a look at what had happened, and we are looking in light of that that time, but also more generally, we're looking at some of our rules to think, can we shorten the settlement cycle, which would address some of the problems that we saw at that time? Can we do something to have more transparency around short selling? Those are some of the things that we can think about and that we're looking at. Are the clearing agencies working the way they're supposed to work? And so all of these kinds of things we can look at. But I really think it's important for people to know that we have a staff here of about 5,000 people, 4,500 probably, about spread across the country. And they are, I work with them every day, and they're dedicated to writing good rules, enforcing those rules uniformly, not with favoritism, but uniformly when they see problems. There are always going to be lots of things for us to spend our time on, and so we're always making decisions about which case to bring, which case not to bring, which rule to write. But people here are really working hard to do the best job that they can.
Okay. And what would you say to big business people that say they can't stand the SEC? Remember when Elon Musk came out and said, "I hate the SEC"?
Well, without talking about any particular person, people have strong feelings about government agencies all the time, and I'm always looking for good input on how we can do a better job. I hear input every day from people who would like us to be doing things differently, and if people present their arguments in a reasoned fashion, I can engage with those and think about what it is that they're pointing out to us.
Yeah.
We have, we always benefit from getting different perspectives. So I welcome comments, positive or negative comments. But again, the most effective ones are ones that are well reasoned and calm, and not personal to not ad hominem attacks, but really careful and considered criticism.
Yeah, well, that's good to know. So, people shouldn't be fearful of the SEC. They should.
Absolutely not. Yeah, no, I mean, and I'm glad you raised that, because as we started out, right, if you're committing securities law violations, well, then we may well have something to say to you, and we may bring an enforcement action against you.
Absolutely.
But on the other hand, if you are coming to us and you're saying, Hester, there's something I'm seeing in the marketplace, it's not working the way I would expect it or want it to work, I'm all ears. I want to hear that. I want to hear what your thoughts are. We're getting a lot of input from a lot of different people, and we're talking to our lawyers and economists and accountants here who have had years of experience in the markets, and we're talking to other people who have had years of experience, and we're putting that all together. We put rules out. We get public comment on those rules. It is intended to be an agency that interacts with the public and that gets feedback from the public, and together we'll build the best securities law framework we can build.
Well, that's good. And I think people should, by hearing that, should have more confidence that, the SEC is really on your side. Just don't do anything you're not supposed to.
Yeah, no, I mean, the goal of the agency really is to create a marketplace that people feel comfortable coming to engage in, that marketplace, feel comfortable investing and drawing funds from that marketplace. It doesn't mean that we are going to guarantee that you're not going to lose any money. That's not what our role.
Right.
Our role is just to set up good rules for the markets within which the markets can operate.
Perfect. And then before we switch over to cryptocurrency, because I really want to touch on that, there was something in the news recently about some Goldman Sachs bankers that were arrested, and it kind of sounded the alarm to a lot of people saying, okay, well, that's fine, but what about the politicians that are trading on insider information? When will they be cracked down upon?
So we bring cases against people all across society who engage in illegal conduct, right? And so insider trading is a great example where we see a lot of insider trading cases here at the SEC. Our tools for detecting it are better now than they ever were. They're more sophisticated tools for detecting it. And it's a wide range of people, including politicians and former politicians who we've brought cases against. And again, because the data points us to where the problem is, the data actually shows us where there might be potential problematic trading, and then we can go look at that. It doesn't matter who the person is who's doing it. We're interested in pursuing cases against people who traded illegally using material non-public information.
Okay, perfect. And is there something that's happening where, or maybe it should be, if you hold a political position, like in the House or the Senate, that you won't be able to trade while in that position? I mean, because it seems that because they're writing these laws and then they can go trade, or their husband can go trade without naming names, I think everyone knows what I'm talking about, can go trade on the information. Shouldn't there be some sort of regulation that kind of prevents that maybe while they're in office? Because I remember when I was on Wall Street, I couldn't buy certain things and I had to be very transparent about what I did.
Yeah, I mean, so it's not our job to write the rules that apply to any other part of the government, right? There's a government office that handles those rules, the rules around trading, and then Congress has its folks who handle that. Our job is really to take the securities laws as they're written and to apply them across the board when we see violations, regardless of who's committing the violations. So that's really our job. It isn't our job to write the laws, but it is our job to, well, we write rules, right? But it's
Right.
not our job to, it's Congress's job to tell us about what the statute is, and then we write the rules underneath those statutes.
Okay, that makes sense. So let's get into cryptocurrency, because we have a lot of crypto people that come on this podcast. I really like crypto. Obviously, there's not a lot of regulation in the space, which has been a good thing because there's been a lot of gains to be made. It's kind of the Wild West out there, but it's also been a bad thing because we've seen a lot of rug pulls. So what are the upcoming kind of regulations that you see that you can talk about for the cryptocurrency market?
I've been calling for some time for a regulatory framework around crypto. Now, again, I mean, I think my perspective on regulation in general is that when two people want to come together and engage in a transaction with one another, and it's a mutually agreed upon transaction, they're both willing and voluntarily engaging in the transaction, we need to have a really good reason to write a rule that says, no, you can't engage in that transaction. So that's kind of the perspective I come from when I think about writing rules. But I do think that there is room for some rules in the crypto space. Now, there's some instances where some of what's happening is violating rules already. So we've seen, you mentioned rug pulls, we've seen frauds, just outright frauds. They call it crypto, but all it is someone trying to steal someone else's money.
Yeah.
We've brought a lot of cases around that, and existing law covers that and enables us to do that. But I think we could write rules to govern, for example, the information that when someone does a token offering, the information that goes with that, so that someone buying could understand who's behind that project, what are their plans for that project, what's the timeline they're working on, when are they going to dump their tokens. There are a lot of things that people would really like to know, and we could write a rule around that. we could write rules for the trading venues where people trade these tokens. We could write rules for crypto lending entities. So I think there are a lot of places. Stable coins is another one where, again, I mentioned that Congress writes the statutes and we write regulations under that, but Congress may be writing a law for stable coins, and they could give us or the banking regulators authority to give more transparency into what's backing those stable coins. So there are lots of opportunities for us to write some rules which would help people kind of navigate this space better.
Yeah, because I think there's a lot of FUD out there. There's also a lot of misinformation. The Terra Luna thing that happened recently really affected a lot of people, and this guy just seemed to kind of get off scot-free, and then he was going to do Terra Luna 2.0. Like, it was no big deal. I mean, there was $60 billion lost, and that kind of woke people up, because people would, if they weren't ready to buy, they would put their money into these stable coins, and then they could earn a good yield on them. Obviously, the Luna, the Terra coin the yield was way too high. So obviously, you guys, if the yield is very high, you obviously are taking some inherent risk. But I don't think people realize what these stable coins were backed by. They just thought, oh, they were pegged to the dollar. But really, there's different types of categories that these kind of fall under.
Yeah, I mean, I think that without talking about any particular stable coin, I think it is important. The point you made is important, which is stable coins are different from one another. And so you have to look at what it is that you're buying when you buy a stable coin. Mm-hmm. And you have to ask what backs it. And some stable coin issuers have started feeling the pressure from the market, have started to put out some information about what backs them, and maybe even had someone come in to audit to make sure that what they're saying is accurate. So some of that the market will drive on its own, but you could have a law that drives that as well. And I think another point that you made is an important one, which is people have to think about the risk that goes with a return. Yeah. So, when you see a return and it looks really good to you, you need to ask yourself, okay, why are they paying me that kind of a return? Is there an associated risk that I maybe can't handle? Maybe this isn't the time for me to put my money in that particular asset because maybe the risk isn't the right mix for me.
Yeah.
So people need to be asking those questions. They need to be skeptical. And so let's take moments like this to remind ourselves that some of those tried and true lessons from finance, they apply in crypto just as they do in any other area of our lives.
Yes, no, absolutely. And especially when you're kind of trading on your own, you're not using an advisor, to really, educate yourself in what these.
Exactly. Educate yourself, ask, can I afford to lose the money I'm putting in? If it's the money that I need to pay for my kid to go to college next semester, or to put a down payment on a house or pay my mortgage, really people need to be very careful.
Yes, no, absolutely. And always, as I say on this podcast, always do your research, always. So recently there were some crypto coins that were pulled because they were identified as securities. Can you kind of explain the difference between, in the SEC's eyes, a security versus a token? Like, why those became
$1 million question.
Yeah.
So I'm not going to talk about any particular tokens or any particular cases. Okay. But what I will say is I think that this has been a very frustrating area for me, but more importantly for many people who are engaged in crypto, whether buying tokens or issuing tokens or running platforms that trade tokens. And so our definition of securities in the US is very broad. It covers lots of things. And one of the things it covers is investment contracts. And the way a lot of these tokens over the years have been sold has been with promises associated with them that the value of the token would rise, that you as the purchaser can just sit back and watch and the token price will go up. That looks a lot like a securities offering. That looks like a lot like the sale of an investment contract. So the question is, though, and I think this is one where everyone has been a little bit sloppy in discussing it, is whether the token itself continues on forever to be a security, or was it just sold as part of a securities offering? And I think that's something we need to figure out a better way to grapple with in the United States. We, typically it's up to the person who's issuing something to decide whether that something is a security, and then to figure out how to comply with the securities laws. But because of the nature of these, I think it would make sense for us to sit down and think more rigorously about when something should be treated as a security and when not. Now, that's something Congress is trying to do, but I think that it would be helpful if we at the SEC provided a little more guidance around this.
Yeah, because I think it just seems like a kind of a gray area.
It's been a very difficult area for many people.
Yes, no, absolutely. And, the NFTs as well. Obviously, those are, driven by these tokens, depending on what platform they're on. But are you guys are we gonna see more regulation in the NFT space? I mean, I've seen some where, people have been arrested when they sell the product, it sells out and then they disappear. So they don't follow through on their roadmap, which is where the value comes in.
So I think, again, it's a great set of issues to think about. NFTs, like stable coins, you can't just say NFT and capture everything, right? There are a lot of different kinds of NFTs, and so some of those may well fall within the SEC's jurisdiction. If you think about an NFT that comes with certain right to a revenue stream or governance rights, those are the kinds of things, then maybe they start looking a lot like a security. And so people do need to be careful and think about it. And I would like for our agency, for the SEC, to put out some guidance to help people kind of think through when they might be bumping up against the securities laws. But again, as in every other area, if you're buying these things, you need to be thinking carefully about what you're buying, understand what it is you're buying, ask a lot of questions, be skeptical, think about how much money you can afford to lose. All of those lessons certainly apply, but we could do a better job in providing some guidance.
Yeah, and I think that would be good, because some people might not know they're even violating these laws. They think they're issuing a token, and then surprise, 6 months or years down the line. So what is the SEC doing to regulate some of these exchanges to make sure we don't have another Celsius, for example?
Well, again, without speaking to any particular facts, I think there is a lot of discussion now in Washington, which was happening before we saw, the difficulties in the crypto markets in recent weeks. But there are a lot of discussions around how properly to regulate crypto and who should be the regulator. Should that be the SEC or another regulator? One could make a case that the SEC would be a good regulator of trading platforms, crypto trading platforms. We're used to regulating stock exchanges.
Yeah.
And so, they're a little bit different in the way they operate. So we have to think about how our rules should apply. And because they trade a range of different things, the question is, do all of those things fall within our jurisdiction? So I think these are some of the kinds of questions that people are asking, and it's great for us to have these conversations. I've suggested that we have some public conversations around what the right regulatory model would be, preferably with our sister regulator, the Commodity Futures Trading Commission. Some people are looking to the CFTC as a potential regulator, but I think we should be having those conversations together to talk about it. And then obviously Congress is also having conversations, and so ultimately, because they're the ones we answer to, they'll get to have the last word on this.
Yeah, right. And so in your opinion, what do you think the impact of stricter regulation on the crypto markets will be?
Well, I think clarity will help people who are really trying to build something that will last, not just sell a token to raise money to do nothing with, right? But people who are actually trying to build something will be able to spend more time actually building that thing, because they'll be able to go to a lawyer and say to the lawyer, okay, here's what I'm trying to do. Can you help me figure out how to do this? The lawyer will be able to say, yes, there's a regulatory regime. We can tell you exactly how to go about doing this. And you can think about what you're building. We can take care of the law aspect.
Yeah.
It'll be much easier for people to actually do things. And then it'll also be easier for people who are interested in participating by buying tokens to understand what it is they're buying, if they have a problem, which agency might be responsible for that. So I think all around it would be better if we just provided some clarity.
Yeah, and I think it would, obviously the crypto market's been like the wild, wild west, which has been great in the bull market, but obviously a lot of people are feeling some pain if they didn't fully get out. But I think that just having a little more regulation and the clarity will definitely help more mass adoption. We've seen a lot of mass adoption, but more people that were a little bit hesitant, maybe sitting on the sidelines, would actually come in and participate.
Yeah, and I mean, one of the things that's happening is that some of the interesting things that are being built outside the United States. Mm-hmm. And maybe we would have more people willing to work within the US. Now, again, it'll be the market that ultimately decides which of these projects has something that is of lasting value and which don't. And that's something that I think we'll see play out over time.
Yeah, it'll definitely be interesting to kind of see what happens. But yeah, I guess we'll just have to wait and see, right?
Yeah, and I mean, I think it's important for people to remember, usually when you try to you shouldn't look at something as just a get rich quick scheme, right? So people need to be careful. They need to look for red flags, exercise skepticism, but also enjoy the opportunity to participate in projects they think have some lasting value. And that's something that every individual has to decide for himself or herself. We can't make that decision at a regulator. We can just help you get the information you need to make your own decision.
Perfectly said. So I know that we're limited on time because you were at the SEC, you were very busy. So I have to be respectful of that, but I so appreciate your time. But where can people find out more information about you, or where can they get in touch with the SEC to ask questions if they should have some?
Investor.gov is a good spot to go, or our other website is sec.gov if you want more general information about the rules we're considering and things like that. Okay. And you can find me on Twitter at Hester Peirce.
Okay, wonderful. Well, thank you so much for your time. This has been amazing.
Thanks for having me.
Of course. And thanks for everyone that's listening. And we'll see you next time to find out who's next.
Hey, your host here, Madison Malloy. Please make sure to subscribe to the show on all podcast platforms, and please rate and review us on iTunes and Spotify. Also, if you have any questions or comments, you can email us at contact@next2madison.com. I thank you again for listening. Bye.